Hi, my name is Brad Gurry and I'm the CEO of SocialSuite. SocialSuite's an environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference, and I'd firstly like to start by congratulating SocialSuite customers that are here presenting throughout the duration of the conference. Black Canyon, Coda Minerals, Gallon Lithium, Galileo Mining, Helix Resources, International Graphite and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The SocialSuite platform is specifically designed for micro to small caps in supporting them, one, to attract capital from investors that value ESG disclosures, two, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. 3. Mitigating organisational risk while building brand value. The SocialSuite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG needs.
It's the widest screen that we've ever had at our conference. So why not have the widest screen at the largest conference that Vertical Events and RIU have ever held? So on behalf of the owners, and I can see Simon Hadfield and Stuart McDonald sitting in the crowd right now, we'd like to welcome you all to the RIU Explorers Conference, and thanks for your attendance. Look, I know we've all been really busy over the last couple of months, but I tell you who have been busy, and that's the RIU staff, Andrea and Charm. Yes, they've had to deal with the fact that we've got 90 presentations, we've got 120 plus exhibition booths, and near on 1,800 delegate registrations. So they've had some long nights, and some of you may be aware that Charm is my wife, and the kids were saying to me, and she just started with Vertical Events in August, and the kids were saying the other day, Dad, this is a really good job for Mum. She's just never home. What's going on? I said, just bear with us, all right? We'll just get through the RIU Explorers Conference and she'll be back. But how good is the resources industry at the moment? You know, like it's unprecedented to see so many commodities all going really well at the one time. And I'm really looking forward to the big 3 days, and in particular Paul's presentation that's coming up shortly, because we're going to hear a lot about this environment that we're in at the moment. And we all know what's driving a lot of it. It's the transition to the new greener power, more electric cars, more solar panels, wind turbines. And what do we need to fuel that? Lots of lithium, lots of nickel, lots of copper, heavy rare earths, and the list goes on, thankfully. But isn't it interesting if you step outside the resources bubble in this great world that we're in, and you go into the real world, and the real world isn't going as well as what we're going. And what do we normally see when there's cost of living pressures, rising inflation, rising interest rates? Cost of living, I tell you what, because Charms is working so hard, I said, oh, I'll sort out dinner tonight. So I got in the car and I said, what do you want? She said, let's have some steak on the barbecue. Why not? So we got 3 kids. I wandered into the local IGA. I bought the 5 bits of steak, bought the veggies, got home. And so the prep work, you know, it takes about 30 odd minutes to get all that sorted. You sit down with the kids. One steak was cooked too much. The other steak wasn't cooked well enough. Oh yeah, no worries. Then you take an hour to do all the dishes. They're all done. We eventually sat on the couch and I said, you know what, Charm? Maybe we should have just gone to Stewie's Squire's Loft Steakhouse. That may have just been a bit easier. And what I'm getting to is the cost of living, the inflation rises. What commodity seems to react really well in that environment? Gold. So I know a lot of you are here to hear from the lithium companies and the nickel and the copper companies, but we've got a lot of great gold companies that are presenting over the 3 days. So definitely take the time to hear from those companies. I tell you what, when you're putting a conference together and you've got such an outstanding number of delegates that are participating, I speak on behalf of our team when I say what a massive relief it is not to have to worry about border lockdowns, masks, social distancing. And we really appreciate the support of you all. And there's a lot sitting in this audience and are going to participate over the next 3 days who supported RIU and Vertical Events endlessly during that really challenging period. And they know who they are. Those companies who rolled up to RIU Sydney Resources Roundup 2021, you know, that was a tough couple of days over there. We had cases in Perth and cases in Sydney. So we'll never forget those companies that made that effort. But a conference like RIU Explorers Conference doesn't exist without our sponsors. And so given I'm the one who put together most of the agreements with the sponsors, it clearly says there that they are mentioned at the opening address. So just bear with me while I go through these really important companies. Canaccord, Paul's presenting very shortly. Canaccord have been a sponsor of this show since they were Pattersons. They're all great mates of Stuart and Simon. And on behalf of Stuart and Simon, we really appreciate the support from the Canaccord team. Make sure you take a time to get over to their booth and have a chat to them. And Paul will deliver another outstanding presentation, as he always does. ANZ Bank. I don't know if any of you guys are customers, but if you have mortgages, maybe it's an opportunity to go and have a chat to them. But we're looking forward to their insights into the current market conditions. Gallagher Insurance, really lucky to have Jackie and Bushy here. Gallagher's have been great supporters of us for many, many, many years. And Make sure you go and have a go at their competition, which is about trying to pick where the drill is going to intercept the mineralisation. Gallagher's will be holding the day 2 drinks function tomorrow night, and I'm sure you guys will enjoy having a beer on their behalf. Hamilton Lock, Sean Hardcastle, Michael Boyce and the team, great for their support. Those guys have been great supporters of us for many, many years. BDO, talk about a company that's been with us forever. BDO, Adam Myers, Peter Toll, Sharif Andrews, really appreciate the support of BDO. And Bureau Veritas, another one that's been here forever. Thanks to that group. And those that are playing in the golf day on Friday, I hope you have a good time. Then we've got CSA Global, thanks to their support. The Lynn Partners, always outstanding. Como Engineers, great to have them as they've always been here for many years. Rio Tinto, a silver sponsor. You'll see a large exhibition booth that they've got. I'm sure they're looking for some new exciting exploration activities that a lot of the junior mid-cap companies are up to. I know that you're going to want to have a coffee. So we've got 2 coffee stations. We've got Max Geo out there at booth number 12, and we've got Quick Camps over in the atrium area in booth 100. On the program, thanks to McKay Drilling as on-site program sponsor, we've got the Lanyard sponsor, AGR. Day 1 sponsors, ABC Refinery and Stantec. We've got the closing drinks sponsor, if you're still here on Thursday afternoon, SRK. If your phone battery runs out, go to booth 11 and see Expedio. You'll probably get thirsty, so you might want to have a drink on behalf of water, on behalf of Orlando Drilling. And you would have got your satchel insert maybe from Noah's Rule, and you can put your maybe alcoholic beverages in that to keep them cold at other times when you head down the beach or on picnics. Now, the notebook. I thought this was pretty impressive, but on your chair, everyone's got a notebook. See? Yeah. Tungsten Metals Group. Check it out. They're listing sometime this year. Pen sponsor, Mets, great supporters of us forever. So there's a pen there. There's no excuses not to take any notes today. There's hot chili for a cold bar if you feel like a sparkling water or flavoured milk. There's Wi-Fi from Hagstrom's Drilling. There's hydration, which could be pretty important on Wednesday and Thursday morning from ENIQ. And then all the company sponsors who we appreciate. There's the staff going past to fill up the drinks as we speak. Now, something new is that Social Suite are the live streaming sponsor, and we really appreciate their support. So big shout out to all those people that are live streaming this. And the media partners, get around and have a chat to Wally Graham from the Resources Roadhouse and Dave Tasker from Chapter 1. Now, I'm going to pass you on to our Master of Ceremonies for today and tomorrow. For those that are regular RIU explorers people, you might see someone a little bit different to what you normally see. But Jerry Gannon will be here on Thursday. And as some of you may be aware, this is the John Farnham farewell tour for Jerry Gannon. He's hanging up the microphone at the end of this year. But he's done an amazing and outstanding job for our organisation for 10, 15, 20 years. He's got a great relationship with Stewie, and we're really appreciative of all the work that Jerry's done. So if you see Jerry on Thursday, make sure you shake his hand and thank him for everything he's done. I'll now pass you over to Chrissy.
Thanks, Jaxon. Good luck to me. Would you put your hands together for Jaxon, everyone? Thank you, sir. Yeah, I think what Jerry is doing is something that we can all hope to emulate, to take the insights that we get from the companies that we see presenting at Stewie's conferences, perhaps a little 10-bagger every now and then retire on our own terms. And as Jack said, he's coming here on Thursday to say hello and also goodbye. Although I do have it on a good authority that he's perhaps interested in a little electric Porsche that Global Lithium have out the front. Ronnie Mitchell, where are you? Is Ronnie in the room? Stick your hand up, Ron. Are you down there? Are you parked at the back here as well? Was it easy to get a seat up there? I was interested that you've parked it out the front. You don't really trust us, do you, in the public car park? He's going to be there for the next 2 days. So if you'd like to have a look at it, you can go and have a chat with Ronnie. He might let you in to sit in it. We might ask you more at 3 o'clock when you're presenting for us then. Now, I have an admission to make to all of you. So my background, why am I here? I'm certainly not a geologist. I'm not an engineer. I'm not a market analyst. None of those things to do with mining. However, I was born in the heart of the goldfields. I was born in Kalgoorlie, and I grew up riding my bike around slime dumps. And it was sort of an era when the only tapping that we did as kids wasn't on screens. It was on the quartz rock out the back underneath the clothesline, looking for our fool's gold. And my brothers and I were the juniors of Collins Street. We were the explorers with a bit of skin in the game, looking for the next big find. And like our idols, Shay Flanagan and the wonderful Paddy Hannon, our last name was Morrissey as well, so we thought we might have a bit of luck there. We never did, but that's okay. We had a lot of fun trying, and we had a lot of really small pieces of rock under our back washing line. I grew up to be a journalist and a storyteller, and I'm really looking forward to the next 3 days of big stories from our presenting companies. And the great thing for those of us who are here in the room, of course, is that we get to listen to some insights firsthand, and then we're going to get to go and dig a little bit deeper over the next few days. And who knows, with a few glasses of Frio's finest ales under their belt, we may get a little bit more than is written in the program book. So can I just point out quickly to the books that you got on your way in here today, these little booklets here. On the back, there's actually a map of every presenter, all of our booths, etc. You will need that to navigate out the back. As Jaxon said, there are a lot of people here and you'll need that to find your way around. Also on page 4, and we've actually got it up here as well, this is our free Wi-Fi for the conference, so make sure that you jump onto that as well. And a big thanks to the team at Hagstrom for coming on board with that this year. Right, we need to launch into our 93 presentations, but before we do that, I've got a team of people up the front here and a very big award that we need to present, and that, of course, is the Craig Oliver Award, the award named after the man, the legend, who was certainly taken from us way, way, way too soon, but we intend to remember him as often and as many times as we can, and that's what this award is all about. So many of you in this room knew him personally, and you tell me he was a great, all-round great bloke. He was a really, really nice guy who just had this way of connecting with people through his sense of humour, be it in the boardroom or even down in the pit. He had a way of connecting, and he was a great team player. So I suppose in the mining sense, he was a bit of a unicorn. He was an all-rounder. He was really good at exploration, mining, corporate, market results, environmental, community. He was also a great team player, and there are all attributes that our judges looked at when they were looking for that small to mid-cap Aussie miner that became a nominee and eventually our winner in 2023. Now, behind me, we've had our previous winners flashing up on the board for the last 12 years. I'm going to move my way over here, and we are going to talk about our nominees for 2023, starting with Gold Road Resources, who are represented today by Andrew Tyrrell. Can you stick your hand up, Andrew, please, down the front here? So Gold Road Resources is a mid-tier Australian gold producer and explorer. They've got a tier 1 mine and exploration project in Western Australia's northeastern goldfields. Busy. Busy? Busy. All right, Hastings Technology Metals. Hastings Technology Metals is on the verge of becoming not only Australia's, but also the world's next producer of neodymium and praseodymium concentrate, which are essential ingredients in the manufacture of modern-day technology products. And their flagship Yangibana project in WA contains one of the most highly valued NdPr deposits in the world. I'm so glad I didn't have to say any of them after drinks this evening, Stewie. A big welcome to Alwyn Vorster. Alwyn, can you stick your hand up, please? Where'd Alwyn enter? Oh, you're over there. You're not in the important seats down the front. Did you want to sit in the important seats? You're right down there. All right, welcome. Liontown Resources. Now, Liontown Resources is very, very busy. Exploration, partnerships, acquisitions, 2 major lithium deposits in WA. It recently commenced open pit mining operations at Kathleen Valley lithium project, which is expected to be the world's largest lithium mine, or one of the world's largest lithium mines. They're transitioning from explorer across to becoming a tier 1 battery minerals producer. Understandably, sitting down this morning, we would have Adam Smits and Jason Froud sitting and resting at the front here. And finally, our 4th nominee for 2023 is the team at Oz Minerals. Now, Oz Minerals, having based its operational strategy on the development of its portfolio of long-life, low-cost assets targeting modern minerals, paid off big time for them when it received a takeover offer from mining giant BHP. Now, should this scheme proceed, Oz Minerals shareholders would be on the receiving end of a very healthy return, $28.25 per Oz Minerals share. Who has Oz Minerals shares in this room? Just 2 of you, 3 of you taking us out to drinks if this is successful. Fabulous. Okay. That will be coming your way, reflecting a lot of hard work done by one heck of a talented team, and represented here today by, believe it or not, I didn't get my representative. Who's representing me today? Yeah.
Jim McKinnon-Matthews.
Jim McKinnon-Matthews, nice to meet you, sir. So they are our nominees for 2023. So Gold Resources, Hastings Technology Metals, Liontown Resources, Oz Minerals, 4 small to mid-cap Aussie mining companies who have impressed our judges this year, making the final decision very, very hard. And making that announcement is not going to be me today. Could you welcome up, please, one of Craig Oliver's greatest achievements. One, he has 3. This one is his oldest, his first, his original model. And then apparently they may have improved when they went to Hannah, who's sitting down there, and Sasha, she's not here, so we won't talk about her. But we've got Georgia coming up with us today, and she's going to recount a few memories of life with her dad, who apparently was a fantastic teacher of how to drive a manual car, amongst other things. So he's got a lot of patience, this gentleman. Georgia, welcome today. Where'd you end up? Behind me? Come on up on the stage. Would you make Georgia welcome everyone, please?
Good. Oh, beautiful trophy. Good morning, everyone. I think, as you know now, I'm here on behalf of my family to present the 2023 Craig Oliver Award. In 2010, we lost my dad along with 10 others in a mining-related accident in the Congo. At the time, Dad was the financial director of Western Areas, but he had travelled to West Africa as a non-executive director of Sundance. I'm admitting that I'm turning 30 this year, and as I get older, it becomes increasingly apparent how young my dad actually was when he passed. He was 46. As a teenager, that felt really old, but you know, in my wise age of nearly 30, that actually feels quite young. I'm continuously impressed of how much he did achieve in his life, and this award is an incredibly special piece of his legacy that we really do appreciate. I'd like to thank Stu McFarlane for his ongoing support facilitating this award and all of the sponsors. This award is presented to an Australian mining company who reflects the person my dad was as an all-rounder who's passionate, and it's for a company who has excelled in exploration, mining, corporate market results, and results within the environmental space and the community over the past 12 months. So it's my honour to announce the 2023 recipient of the Craig Oliver Award, Oz Minerals.
Thanks so much, Georgia. Thanks, Stewie. And thank you for making this award available to the industry over the last 13 years. The recognition of this award to Oz Minerals is greatly appreciated, and it's just unfortunate the more of us couldn't have been here at this time. It goes some way to the recognition of the efforts by a great many people, not just only within Oz Minerals currently, but for the people that have been involved with various projects over the years. Over the last 8 or so years, the Oz Minerals has worked very hard to create value for all of our stakeholders, not only the shareholders. There's been a real focus on employees, government, communities, suppliers, customers, and of course the shareholders. So it's a fully integrated business model. And what we do what we do is not the most important things, it's how we do things. And I think that's what Oz Minerals really strives for. So I was asked to keep this fairly brief, so brief it is. So thank you very much. Thank you very much to RIU. And again, thanks very much to Craig's family for allowing this award.
Congratulations to all our nominees for 2023, and in particular our winners, Oz Minerals. A great accolade. Congratulations to you. And thanks so much to George and Hannah for coming along today and being part of this as well. It's great. You can tell Sasha all about it when you get home and I question her not being here. It was really lovely of you to be here. Right, team, we need to get down to the business of this conference. 1,800 of us are registered. For those of you who are playing along at home, a big thank you to Social Suite. As Jaxon mentioned, this is our first year with a sponsor for our online streaming. For those of you who, like me, I actually wear hearing aids. So if you're having any issues hearing any of the presentations today, one of my suggestions to you is to log on to the streaming and just get the sound to come through your ears. So you'll be able to see and you'll be able to hear a little bit more clearly as well. And if you're having any issues with that, come and see me later and I'll try and help you through that one as well. It's just an easy one. Now, for those of you who are playing along at home, you may not get the sausage rolls, and judging by how many of us, we may not get a lot of sausage rolls either at morning tea, but keep an eye out because Social Suite has put together some great little video packages for you at the start of each of our sessions. So we've got 4 sessions today, and we're going to actually, before we even get into our presenters, Paul Howard sitting over there grinning at me. He's a fantastic, you're a great presenter. Why don't you come up and keep us all entertained for the first 20 minutes? Now, most of you will know Paul from Canaccord, and it is his role today, his role for the start of the conference to set the tone and give us a little bit of a market analysis. You've been with the company, I think, 2016, but as he comes over here, imagine this man in fluoro, with his hands all dirty in the pit. I think he may even have sported a beard at one stage. He was by trade originally a geologist before he went over to the dark side and bought himself a suit. But he's going to set the tone for us today. Please make him very welcome. Paul Howard.
Thanks very much, Chrissy. Delighted to be back here again. Just to give an update on a previous presentation I gave that assesses the costs within mining. Canaccord's delighted to continue its association and sponsorship with the RIU Explorers Conference here in Frio. And we also do have disclaimers like many of the corporates presenting today. Before I go into it, I use this slide quite a bit, really want to highlight just the performance of Canaccord in the metals and mining ECM space. We continue to rank #1 in calendar year 2022. Obviously, proceeds put us at the top, but really a point I always make is the number of deals. We've got a very, very hardworking bunch of investment bankers, men and women across the business, 117 deals last year, and we're looking forward to leading the charge again in 2023. So last year, there was a lot of focus on costs within the mining sector. There's a number of words you see there that were bandied around quite a lot. And I think it's going to remain a focus in 2023. And so I just wanted to step through the sort of cycle of where we see costs in the sector and sort of start off by to spend the money, you need to have the money. So just looking at ECM activity, cap raises and the likes in the last 10 years or so. Typically explorers, as we have here at the conference over the next few days, don't take on debt. Some might have con notes, but a lot of them will get their equity through the cash through equity raises. In the last 10 years or so, there's been over 3,500 deals on the ASX, raising $54 billion from different brokers and bankers over the last 10 years. The number of deals are growing. You'll see in resources companies, this is growing. There's more frequent cap raise, perhaps exploration costs are rising, and that's why there's greater need for capital. We've already got off to a pretty good start in 2023, a little black bar on the right-hand side. If I annualize that, looks like 2023 is going to be a pretty good year, perhaps not up to the level of 2021, which is a bumper year. We'll get to that a little bit later in the presentation. The average deal size, 16 million, and that's increased over time. That's that little green line down the bottom. And I think perhaps it reflects more diverse geographies and generally rising costs in exploration. And what's driving this? A number of things. Companies need to raise money out of necessity. Market conditions will prevail as well. It sort of reflects the timing of this, and also commodity cycles are factored in there. Really, the main point I tried to make with this is those charts on the right-hand side are commodity prices and gold and a number of indices. And I was trying to see, was there a particular one that led the reason why we saw an increase and decrease in raises? And the answer is no. It seems to be a combination of all these three. Post-COVID in 2021, perhaps companies were holding back raising money, weren't sure of the faith. And then obviously in 2021, things looked to be back to normal and there was a lot of activity in that space. Similarly, 2018, gold price started to move and there's a bit more activity from 2018 onwards. And then similar trend in IPOs. And there's been over 1,000 IPOs on the ASX since 2010. And of that, 436, so that's 41%, have been in the resources space. So the resources are the dark blue bars here. Again, similarly, COVID seemed to stall things in 2019, 2020. But we are seeing an increase in IPOs, and perhaps that's reflecting a general demerger in the industry. Less large mining houses, perhaps. WMC, BHP divested South32. We are seeing a little bit of M&A in gold right now, but I think in general, you could have a gold explorer that has lithium assets and they're going to spin them out. So we're seeing a little bit more action in the IPO space generally over time. And that also correlates with the commodity prices. So I've got a number of commodities and gold here, and you see, 2013, 14, 15, sort of not many resources IPOs. Things started to pick up in 2016, perhaps lithium 1.0, perhaps. But also you see in 2021 a big rise, and also commodity prices. So but I think that's really boils down to market conditions that are prevailing here. And so our IPO performances, I showed this slide last year of the 2021 IPO performance. So of the 107 IPOs, over 12 months post-listing, you've got to make 34% on these IPOs. Probably skewed to the right there with those being in negative territory. So probably highlights the reason you might want to have a diverse portfolio and actually, rather than just sticking money in a couple of stocks, you want to have a spread across the board. And then interesting, 36% of those IPOs in 21 were in gold. And I want to highlight 10% in this instance, 10% in 21 were in lithium. And just remember that number for a couple of minutes. And then just generally, I'm not trying to highlight the companies themselves, but more the subsector within the resources where they are. Distinct green color to the left, which are lithium and other EV related IPOs, so have performed strongly over the 12 months post IPO in 21. And unfortunately, perhaps the gold price is reflecting underperformance in those gold IPOs to the right. And again, that's not actually the theme we saw last year. And this is 2022, so a lot less IPOs. Thankfully, on average, 6% up in the 12 months post IPO. So, still a reasonably good performance. 20% of these are gold. It was 36% in the previous year. And lithiums have doubled to 20% from 10% previously. So we're seeing a variation, I suppose, in the subsector that these IPOs are in. And then just to color to highlight that, I think it's more of a broad spread, actually, if I'm honest. I actually thought we'd see, again, more green to the left, reflecting the EV type IPOs, but I think it's a general spread across the board there. Okay, so a company has IPO'd or it's raised capital, it's got its funds. Now it's time for exploration spend. Again, a slide I like to use quite a lot because I think it's quite telling. Hopefully you can see it okay. It's a bit of detail on that. But essentially, the exploration spend, which are the bars here based on different jurisdictions around the world, exploration spend correlates with the commodity price, or at least it used to do that. If you see gold in the top left, very good correlation till about 2020. And then there's this gap appears. You see a similar gap, perhaps in nickel, a similar gap in copper in the more recent years. You don't see that gap in lithium. So I used to think that gap was M&A. That instead of spending money in the ground, a gold company perhaps is spending that money on M&A. And that's why we're seeing the gap. I now think there's also another sort of level to that in a gold company perhaps has realized in 2022 that not getting a lot of attention, perhaps let's spend money on, we've got all these greenstone belts with pegmatites, let's start looking for lithium, and perhaps instead of spending money on gold, they spent money on lithium exploration. So perhaps we'll see that in the 2023 data, which isn't available yet. And then I just thought rare earths was an interesting one because I don't know what the numbers are. Perhaps there's going to be a large increase in the amount of rare earth companies presenting, I'd say, in the next 3 days, or at least they'll have booths. But we're not necessarily seeing a correlation in the spend. So I reckon if I'm here in 12 months' time, the expenditure on rare earths in 2023 will be a lot higher, and perhaps going up towards the line there for the NdPr pricing. Okay, so you've spent your exploration dollars, you've made a discovery, and now you are into mining studies. There's a lot of data for this, and I thought the most comprehensive was in gold. So there was 725 gold companies with mining studies completed since 2023. And in general, the number of mining studies are rising. And I think perhaps that's related to commodity prices. A project that was not economic at lower gold prices, for example, is probably going to be economic at today's prices. And so they're dusting off the old folders and doing mining studies on these projects. Interestingly, the little pie chart down the bottom, half of these projects are in the Americas. And, you know, I think certainly I read a lot, you know, a new project comes online in North America and it hasn't been touched since 1936 or something like that. So it's a lot of old projects that are now being brought back to the front there. Interestingly, you know, we see a rise in the number of copper golds, porphyries that were perhaps discovered in South America in the 90s. And that's sort of an acknowledgement of it takes perhaps 10 years or so to develop these exploration discoveries into a mining study phase. And then I just wanted to highlight then quite a large number of studies from African projects. That's the black part of the pie chart there. And perhaps that reflects sort of an opening up of West Africa in the noughties. So looking at the costs within these mining studies, it's getting more expensive to build a mine globally. Really all you want to look at on these charts, these are based on different geographies, but the line is trending up across the board. It's getting more expensive to build a mine. Australia is actually the cheapest, and I think that's perhaps due to the localized labor force and efficiencies. We've been building mines for a long time here. Africa is increasing at the greatest rate, and perhaps that is reflected in the large GDP growth we're seeing in Africa. And Americas would appear to be the most expensive. And I think perhaps that's in South America, big low-grade deposits are perhaps at altitude, a little bit more expensive to build, but certainly the data would suggest that at least. The mine size themselves are generally decreasing. So the average global gold mine today is 3.8 million tons per annum in size. That's quite large for an Australian standard, I think. But they're generally decreasing in size. And if you think about it, mines are probably going underground and the grade's higher, so you need less material to mine and the throughput's lower. So mines are generally decreasing. But I think it's certainly that the trend in the bottom right there on the chart, it is ticking up since about 2014. And perhaps that's again reflecting on the other point I made about looking at old projects, dusting them off, and actually we're bringing older projects on. And so there's perhaps, you know, there's a bit of a, I suppose, they counteract. I'm saying that mines are actually getting smaller, but the data since 2014 would suggest that some of them are at least are getting bigger, but it's also tracking the gold price. So there's certainly a correlation in some way there. Okay, so you've done your study, you've put out your CapEx numbers. Generally, from a PFS through to a DFS, CapEx costs are increasing by 9%. So there's 133 companies in the database I have that have put out both a PFS and a DFS. And it's average overspend, or not overspend, but cost creep from one study to another is 9%. Australia being the highest, 24% in Australia. But in general, we do see this. And you know, anecdotally, I suppose, as an analyst, we sort of go, you know what, we generally do see this happen across the board, and we've seen some quite recently announced as well. And then actually, when it comes to building your mine, you're overspending by about 12%. And again, you know, that's something that us analysts tend to have that view. And it was nice to sort of do the work and actually see, that view is actually underpinned by some hard data. Median overspend is 12%. Only 28 companies that I had the data for, so perhaps not a statistical population, but we'll build this out over time and see if it holds true. But interestingly, Australia, Americas, and rest of the world is 19%. So let's call it 20% overspend. Yet Africa -3. So Africa's actually coming in under budget. Not quite sure why. Perhaps there's maybe a bit of fat built in initially when setting out these projects, and there's maybe some crack teams of mine builders in West Africa. There's one I can think of actually that comes to mind, and perhaps that's why we're seeing these costs come under budget for builds in Africa. So don't despair if you're building a project and you're going over budget. Everyone else would appear to be as well. And then just finally, you built your mine, you're operating, and we're looking at all-in sustaining costs. Perhaps all-in sustaining isn't the best way to look at costs, because there's a lot of corporate overheads or whatever that sit outside of all-in sustaining. But this is the data that's available, and I would suggest that companies that are doing this notion of mining to a margin. So all-in sustaining costs have increased as the gold price has increased, and that's what I'm showing in the top chart there. Really, from about, I don't know, what do you reckon, 2007, I should say, that gap between all-in sustaining and the gold price is pretty similar. That's reflected in the green bars. So that's the margin there on the green bars on the bottom there. And so anecdotally, though, the data hasn't come out for 21 yet, but we think that margin is probably going to decrease. At least if you're looking at quarterly reports, there's a lot less cash generation among the gold producers, and costs are rising. And some of the operators actually aren't profitable at the moment. So it'll be really interesting to see what happens in 2022 data comes out for this. But look, that was just a bit of a run through on the general costs in mining, a bit of an update on something I presented previously. It's an area of a lot of focus. Certainly as analysts, we're looking at this every day. And obviously trying to pick out what's going on in this. So look, I've taken you through ECM and IPO data, right through to exploration spends, the study data, and indeed some data from operating mines. And I'll leave it there. So thanks so much for your attention, and look forward to speaking with many of you over the next couple of days at the conference. Thank you.
Well, Howard, thank you very much. And you are well within the rules of engagement, which I'm about to outline to everyone. For those of you who've just come in, or there's a couple of you leaving, going back to your booths, understandable, that's fine. There are our staff are going out to their booths. But if you come in during the day and you can't find spots to sit, our reserve signs down the front are about to disappear for our nominees. And there's also space down here on the other side as well. So come in and make yourself comfortable and move around. Right, rules of engagement for our presenters today. So we've got 4 sessions. Our first 3 sessions, our presentations are 15 minutes in length. So at the 13-minute line, moment, you will hear me ring my bell. With 1 minute to go, I will stand up and look at you meaningfully. And then as you get closer and closer to the 0, I'll start to walk across the stage to you. Now, the only thing that will stop me standing right next to you is the fact that I'm not allowed to be in the feed that we're sending to the ASX, but I will glare at you menacingly from the side and potentially put my little heel into you. So we need to be finished in that 15 minutes. And Jerry said, that's my job, is to keep you in time and make sure you go through. So I will be a little bit brutal on the sideline for any of our presenters today. So we've got... the majority of our presenters today are old hands at this. We do have a couple of virgins on board, but our first one is certainly in the former. Can I ask the wonderful Andrew Pumphrey, founder and CEO of OzAurum Resources, to come and join us? He's right up the front as well. So Andrew is actually, he comes from a family of geologists. His wife is a geologist. His son is training to be a geologist. And I asked him when he came in today, I said, did your son get some part-time work, perhaps as a geo's assistant over the summer holidays? He said, no, he went drilling in Kalgoorlie. Now, cop this one. How much was your son making an hour?
$57 an hour, which is a lot for a 20-year-old.
And he's 18.
Yeah, he just loves it.
Yeah, they had to wait for him to get off P-plate so he could drive a special bit of equipment. But if you've got kids that are looking for a holiday job, that would be the place to go. And if you're looking for things to invest in, we'll be listening to Andrew with interest right now. So we're talking OzAurum Resources, who are continuing to accelerate the development of their advanced Mulgabi North Gold project, which is located in the Eastern Goldfields in Western Australia. Would you please make him very welcome as our first presenter for RIU 2023?
Thanks very much, Chrissy, and the organisers of this great conference for an opportunity to present today. OzAurum is a gold-only story. So we're an IPO that started 2 years ago. We raised $12 million based on 2 gold projects in the Eastern Goldfields, Mulgabee North and Patricia. They've been long-held projects by myself. We've been working out in that area for a long time. They're quite advanced. And basically, Mulgabee North is adjacent to Carosue Dam, Northern Star. It's a 3.2 million tonne per annum mill there. And I guess in the last 2 years, we've done a lot of drilling. We've done over 94,000 metres of drilling. When I said that publicly, sort of at the IPO time, everyone laughed at me a bit. And I thought, well, we've got to have an aim. And that drilling has really set us up for success. And that's what I'll talk a little bit later about, is what that drilling has provided us with. A lot of the drilling has been RC, and that's really important when it comes to a JORC conversion to a resource. So that was really important, and obviously a lot of exploration drilling in air core. And the other project, just briefly, is a Patricia project. It's a high-grade gold project located near Mulgabee. Historical production of over 40 grams per tonne. So on the corporate thing, we're pretty tight share issue, 127 million shares, market cap of a bit over 10 million. Our share price has been floating around 8 cents, so we're a really good value proposition, which hopefully I can explain shortly. We've got a bit over $2 million cash in the bank. 2 major shareholders are myself and Martin Holland, so it's a pretty tightly held stock. On the directors, Jeff Williams is a mining engineer. I've worked with Jeff in the past. My background is a geologist and mine surveyor. I've operated private gold mines in the goldfields over the last 30 years, as well as operating a exploration contracting business. So I know how to do work in Kalgoorlie. And we've got Andy Tudor as a geologist, and obviously managing director of Nexus Minerals, and they're out in our neck of the woods also. And then we've got Stephen Hewitt Dunn. Well, look, I think we're in a really strategic location. It's in a plus 30 million ounce gold district. Obviously, there's 2 major structures in that area. There's the Keith Kilkenny Fault and the Mount Celia tectonic zone. And basically, all the major gold projects sit in those 2 structural corridors. If you're not there, you're probably not going to find a significant deposit. I guess, you know, we're right next door to Carosue Dam, which is always handy, come to getting a reserve out. We're very close to Kalgoorlie, obviously, and I think it's a huge advantage. I mean, Kalgoorlie is the gold mining capital of Kalgoorlie, as far as I'm concerned. It's a really easy place to do business. We've worked there for a long time. We understand all the suppliers, and it's just a great place to be working out of. We've got sort of long-standing, basically, relationships with all our existing stakeholders. I spend a fair bit of time in the field, so I'm fairly hands-on. So I'm out there talking to Pinjin Station, which we're located on that pastoral lease, with Leo and Lawrence Thomas. They're its Aboriginal-owned station. So I'm really big on stakeholder relationships. I could have made a whole slide about this, but I haven't. I just think if you're working in an area, you've got to work with everyone and take everyone along for the journey. And also with our traditional elders are led by Aubrey Lynch. He's a very well-known Aboriginal elder in the Goldfields area. Just going on about Mulgabee North project. Look, I think it's a fantastic project. It's 100% owned by us. There's no royalties on it. We only have to pay state government royalty. We've got the main structure there is a relief shear that extends for about 8 kilometres through our project area. Basically, we're sitting in a basin. So the rocks here, where Carosue Dam is, where's my pointer going to? Yeah, sorry. Carosue Dam sits on the western side of the basin, and we're on the eastern side of the basin. So it's pretty simple stuff. Carosue Dam, there's over 3.5 million ounces of gold over that side. We're exploring on the eastern side. The rocks are identical. The only thing we lack is the intrusive rocks that they see there, but we think there's a significant potential to make a big discovery on our side of the fence. It's basically been underexplored. I pegged the ground 30 years ago and held it privately. So it was a Freeport McMoran discovery in the late 80s, under 20 or 30 metres of cover. And we've done some drilling on it during that time, but obviously you're always restricted what you can do privately. So it was a great opportunity to bring this project to the public forum where we could raise some money and actually really give it the attention it deserves. And obviously our mineralisation is open at depth and along strike. And we think it's got the potential for a major. Moving on, look, we've obviously done a lot of RC drilling, over 36,000 metres drilled and diamond drilling. We've got some great results there. We've really been focused on these main core areas. Obviously, there's a lot of potential in here. We've got some results in here already that we will be following up. So there's about a kilometre gap between what we call a James prospect and the Band prospect. And look, that's still wide open at the moment. We made a new discovery last year in what we call the DMAG zone. And basically that was just an area where there was a mag low there and a cross-cutting structure, and we started drilling there. We obviously got some good air core Super G numbers there. We followed it up with RC, and first hole we drilled there, we came at 56 metres at 1.3. So they're sort of good numbers to start with, and we've been following that ever since. We've got some other areas in this western gold mineralisation with some good numbers also. But pretty well the whole area along the relief shear, we've been getting what we think are potentially economic intercepts. So yeah, it's been an exciting, get this thing to change, been an exciting sort of journey doing all that drilling. So, I mean, I'm driven to add shareholder value. So we've announced that we'll be putting out a resource this year. We've put it back by a quarter. Basically, we've been doing some heap leach test work, and the initial side of test work of that's come back with over 80% recoveries, up to 88.9, which that's stunning for heap leach test work. I mean, it's in an intermittent bottle roll. Obviously, this is early side of test work, but all I can say is that our ore mineralogy is perfectly suited for heap leaching. We've done a lot of petrology on the mineralisation. We know that the gold is fine gold. It sits alongside with coarse pyrite. So we're very confident that the scaled up test work that we've started already is going to sort of replicate those sort of results. And obviously this is not the first bottle roll I've done on project because I've held the thing privately. I've been doing some of this test work in the background for a long time also. So I've always been confident that we'll be able to heap leach it. Our stoping study has started. It's led by Jeremy Peters. He's ex-Snowden. He's got a really good reputation around the place. And we'll be using a team of goldfield specialists, mining engineers, geotech guys, and metallurgy guys. And they're people that I've worked with. Previous life was a registered manager. We basically got 4 open pit gold operations started. So I've sort of done all this before. There's nothing new about it. I know the right people to use, and the right mining contractors. Just on the heap leach really quickly, it's low capex. I mean, as simple as crushing, agglomerate, build a pad, put a liner down, pumps into a carbon column, strip the gold. It's proven technology. It's been around here for a long time. Basically, Grants Patch Partners started heap leaching in Kalgoorlie back in 1976. I built my first vat leach privately when I was 23, and that was a 3,000 tonne vat leach north of Kalgoorlie. So that was over 30 years ago. So I've done this before. There's nothing new about it. On the OPEX, obviously that's very low too. We're thinking it's probably roughly 50% of a CIP, CIL, and I'm not beholden to anyone's third-party plant. The biggest issue that all our small explorers have got is when we want to get something to production, we've got to find 1 million ounces. Otherwise, we just can't raise the capital to find 60, 70, $80 million to build a plant. We're really hopeful that we're going to circumvent all that and we can just basically put a heap leach in. I've just got a really simple photo I've sort of pinched off the internet, but it just shows how simple it is. It's basically, once it's been crushed, agglomerated, it's a matter of stacking it, running the ag pipe liners underneath the heap and making sure the drainage is right, and you start producing gold. Obviously, there's a bit of a long lag there. Some of these things run for up to 6 months. And look, Kambalda, St Ives had a large heap leach operation for a long time. Telfer was running at 10 million tonnes per year at a heap leach. So, I mean, it's not new. So we're pretty advanced. Just quickly, we've got a granted mining lease there, M28240. We've got miscellaneous licenses in place already for the bore sites and the pipelines. Obviously, we've done advanced water search, and as we've been doing the course of our normal exploration, we've been running around trying to find the deepest part of these paleo channels and what we think is going to be holding water. Obviously, one of the big things we need for a heap leach is water, so we've basically identified our water sources as well. I'll move on from the heap leach. I'm still really excited about the exploration potential of this project. This project, we've basically got a big gravity low here. It's a big gravity low trough. Our friends across the other side of the fence at Northern Star and Saracen would always talk about the corridor of riches, and that's where all those Northern Star mines sit: Worland, Dervish, Carasue Dam, Karari. There's a whole stack of them sit in this gravity low trough, and that's a really key geophysical signature. And the gravity low trough tells us we're in low density rocks, and that's caused by alteration from big hydrothermal systems. So I'm confident that as we do more work on this project, we're going to find a lot more gold there. We've got the right geophysical signature as far as a gravity low. We're obviously looking for cross-cutting faults. All these things are cross-cutting faults. I've worked on these things for over 30 years. If there's not a cross-cutting fault somewhere, there's no reason for the gold to drop out. So it's all pretty simple stuff. Also, I like the fact that we've got some cover there, because that's obviously prevented anyone else from finding gold mineralisation there previously, especially old timers. And just quickly, I guess I've talked about our rocks. I mean, we are in that Carasue Dam stratigraphy. My wife's a petrologist, and she's obviously done consulting work for most of the companies in the gold fields, so we understand these gold systems well, as long as we've Scott Halley, who's a geochemical expert, and we get our structural guys in to help us too. I'm a big believer of really good technical geology is how you're going to make a discovery, and we're really focused on doing everything properly as we go through this process. A few key features here, just of where some of these big gold deposits find. Really quickly, you've got to have this spatial association with one of these unconformities. We see that at the Gold Mile, we've seen it at Canada Bell, we see it in Invincible, and we see it at Mulgabby North. It's not everywhere. There's not all gold deposits can say they're sitting on this particular unconformity. And that's really important, because being on this unconformity shows that you're in a long-lived gold system. And we can see we've got multiple phases of mineralisation have been involved in the rocks at Mulgabby North. There's about 5 different phases of mineralisation in the core that we're seeing. So that gives us a lot of confidence that these rocks have been well and truly done over. Looks like we're winding up. Just really quickly, the air core, we've done almost 50,000 metres. We've obviously outlined this big gold anomaly that goes for about 4.2 Ks. We've got some fantastic results there, and we've been basically drilling along that for the last probably 2 years, and that's providing targets for our RC drilling. Just get this clicker to move. Just what are we doing going forward this year? Heap leach scoping study is getting our main focus. We're going to get our mineral resource out. So obviously it's got to be built for heap leach numbers, which means our cutoff grades change a bit for what we'd normally use in the CIP, which we've already done. So now we've had to redo it. That's all right. We'll learn a bit more as we go. Obviously got these structural targets, so we're going to be testing. So we're going to be a pretty active year. Just really quickly, former life was a drilling contractor, so we've got my diamond rig on site. There's over $1 million worth of gear out there that I'm giving to the company for nothing. So basically, we're doing drilling for 50% cost of anyone else. So we'll probably save the company about $500,000 so far. So and it's given us the flexibility of having a rig when we need it. So we're winding up. So thanks very much for the opportunity to present the OzAurum story.
Thank you, thank you, Andrew, leading the charge today. Now, for those of you who follow Twitter, I know there's a couple of us who are on Twitter, I thought the perfectly logical handle for us for this year would have been RIU Explorers. Has anyone actually looked at their Twitter feed for today? How about our tech boffins over there? RIU Explorers. Apparently, though, we're spelling it this year just for a point of difference with 2 E's at the end. So if you're trying to jump onto Twitter, it's RIU Explorees. So just, I reckon it's Jaxon that's in charge of that one, so I can give him a hard time out the back about his spelling. He's organised a pretty good conference, but he's just may have got some of his letters around. And I say about Twitter because if you are a Twitter person, you may have seen a bit of argy-bargy last week in relation to our next presenters up on stage. In fact, if you're looking at the Share Cafe, our next company was on Friday, and with 4 minutes to go for them to be on air and presenting, the ASX rang them up and said, you know what, all those figures that you got on page 17, get rid of them. And they're about to go into a live presentation. So someone's had to go through, get rid of them. They were actually the forecast figures, the revenue forecast for 23 and 24. So pretty important to the presentation. And it's caused the young man down the front here who goes by the name of Dougal Elder, mild-mannered accountant, fellow from Queensland, to tear a few more of his luscious locks out of his head. He wasn't very impressed. He's worked it all out now, though, and he's here today with a presentation on behalf of Sayona Mining and their North American lithium operation, which is in Canada. Would you please make him welcome?
Thank you very much for that warm welcome. It's great to be back at conferences in person, and thank you very much for hosting us. My name's Dougal Elder, a finance manager at Sayona Mining, based at our head office in Brisbane, and I look forward to sharing with you some exciting news we have for Sayona in 2023. So Sayona is on track to be North America's next lithium producer. Production commences at our North American lithium facility in March of 2023, so next month. The plant is expected to commence production next month and then ramp over the next 6 months before levelling out at a stable operating level towards the back end of this year. The team on site are targeting an annual nameplate capacity of 226,000 tonnes of spodumene concentrate per annum from that facility. Corporate snapshot for Sayona: we're a $2.3 billion ASX-listed emerging mining producer next month. We were added to the ASX 200 index last September. We have approximately $100 million of cash on the balance sheet at the end of December last year. That cash will carry us through first production next month and beyond. And more importantly, we have no debt on the balance sheet at the moment. Very experienced board and senior management team at Sayona, decades of experience from project development through to operational execution. The team is led on a day-to-day basis by our Managing Director, Brett Lynch. ESG is very important for what we do at Sayona, with a big focus on community and First Nations relations in Quebec. We believe that if we don't have the community on side in the areas in which we operate, then our projects can't be a success. So we spend a lot of time focusing on transparency and mutual collaboration with the local communities and the First Nations in the areas in Quebec in which we operate. Quebec. We think Quebec is a fantastic jurisdiction in which to operate. And there's a number of reasons for this. Being so close to the key battery metal markets in the US, Quebec can provide lower freight costs of battery metals into the US, which means lower cost and lower freight emissions. Quebec also has a plentiful supply of hydropower. A significant proportion of our manufacturing facilities in Quebec will be powered by clean, cheap hydro, which is a massive tick from a cost of production basis, but also talking to end customers and OEMs. We have significant ESG credentials being based in Quebec. Quebec has also a long history as a mining province, skilled labour, good infrastructure, high quality resource base, which means it's a great area to operate. And finally, a very supportive political environment. The Quebec government is very focused on developing a battery metal supply chain within Quebec. Sayona has aligned ourselves to the Quebec government strategy, and we're focused about going from mine through to concentrator, through to downstream in accordance with the government's strategy. So you add all of those factors together, we think Quebec is a fantastic jurisdiction in which to operate. Sayona has the largest hard rock lithium resource base in North America. We have 34% of the known hard rock lithium resources in all of North America. We're running a dual hub strategy to create an end-to-end value chain from mine through to downstream processing, both within the province of Quebec. If we drill in on our southern project, our southern hub first, the Abitibi hub, this is cornerstoned by the NAL facility, a brownfield mine, concentrator, and partially constructed lithium carbonate facility. That's on track for first spodumene concentrate production next month, with the ultimate ambition of producing lithium carbonate by 2026 at a run rate of 23,000 tonnes per annum of lithium carbonate. The Abitibi hub has a combined JORC resource of 119 million tonnes. The number on screen is the Canadian NI 43101, which is a measured and indicated equivalent to the JORC of 119 million tonnes. In the north of Quebec, we have the exciting Northern Hub, which is cornerstoned by the exciting Mobiland project. It's currently a foreign resource estimate of 12 million tonnes, but we have the ambition to grow that in excess of 60 million tonnes. We have over 33,000 metres of diamond core drilling completed to the end of October last year, with more completed since then. And we look forward to assays coming back from that drilling to get us closer to our ambition of growing that resource in excess of 60 million tonnes. In the Northern Hub, we have downstream ambitions as well, with a target of 100,000 tonnes of lithium hydroxide by 2030 being fed by that greater than 60 million tonne resource. NAL. So NAL is a joint venture owned by Sayona Mining, a 75% interest, and our partners Piedmont Lithium, a 25% interest. The joint venture is on track for first production next month, and more importantly, first revenue and first cash flow to the JV in July of this year. If we can get NAL into carbonate production by 2026, NAL would become the first and only integrated operation in North America, from mining through to on-site processing and then downstream conversion for supply into the US market. Part of what we talk about at Sayona is to power North America. It's about size and speed. Size is we have the largest hard rock resource base in North America at 34% share, and speed is speed to production. This was delivered through the purchase and the turnaround of a brownfield asset, North American Lithium, for a cost of $200 million, and 2 years from acquisition, we are going to be in production. The refurbishment of NAL has been on time and on budget. The crushing circuit has been commissioned, with further commissioning activities to take place over the coming weeks. We have rail contracts signed to deliver into the port in the east of Quebec. We have permitting is all completed, staff have all been recruited, and the mining contractors have been operating in the pit since October last year, meaning that our ROM stockpile today has greater than 30 days of crusher feed intake at full capacity. So plenty of inventory there ready to de-risk our restart operation. And all of this culminates in our projected production tonnage for the end of this year, for the 6-month period to ending 31st of December, of between 85,000 tonnes and 115,000 tonnes of spodumene concentrate produced by NAL in that 6-month period. So as we can see here, the blue line is the ramp period. So first production commencing in March of this year. The plant will then ramp progressively over the next 6 months before levelling out towards the end of the year and targeting that nameplate capacity of 226,000 tonnes of spodumene concentrate. This then delivers our shipments. We're expecting 2 shipments per quarter of 30,000 tonnes per shipment, totaling 120,000 tonnes of spodumene concentrate to be shipped to customers in the first half of FY24. So our revenue position, NAL joint venture has 2 channels to market. We have an existing offtake with Piedmont Lithium for 113,000 tonnes, or 50%, whichever is greater. So if we hit the targeted nameplate of 226, then Piedmont will get half, and the other half will go to other customers at a much higher spodumene concentrate price. The offtake commences in July of 2023 and runs for the life of the facility or until the NAL facility is producing lithium carbonate, at which point all of NAL's spodumene concentrate will be preferentially delivered for the requirements of the carbonate facility. Importantly, each shipment is going to be shared between customers. So each 30,000 tonne shipment will be shared between Piedmont at the offtake price of $900 and other customers at a much higher price. If you do some back of the envelope maths at a spot price of 4,000 US a tonne, each shipment should bring in around Canadian $80 to $85 million per shipment for the benefit of the joint venture. So the NAL joint venture is quickly going to be generating good cash flow for the benefit of the joint venture. We have news flow around additional offtakes pending for the other half of the production that will be coming over the next couple of months. And producing at nameplate capacity will maximise revenue for the joint venture and ultimately for Sayona. Part of our size theme is around growth of resource base. In the NAL, in the B2B hub, we're doing this through, we acquired some claims from Jordan Resources, which is neighbouring to the NAL claims last year. And we also have the right to earn into an additional 28 claims. We're aggressively exploring that over the next 2 years to take up that 51% interest. And that's all about delineating a resource to provide more ore feed for the NAL concentrator to increase the life of facility. We have a lithium carbonate PFS due in April 2023 of this year, with ultimate production aims to be producing carbonate from that facility by 2026. So timelines: first spodumene concentrate production next month, ramp up period towards the end of this year, and then targeting that lithium carbonate production from NAL by 2026, the first in North America. Moving on to our Northern Hub, the Moberland project, very exciting prospect. It sits in the James Bay region with a number of world-class assets. We've completed over 33,000 metres of drilling, diamond core drilling to the end of October, with more done since then. We've got an ambition to grow that resource in excess of 60 million tonnes to ultimately feed our ambition of 100,000 tonnes of hydroxide by 2030 from that project. That project is owned by 60% for Sayona and 40% by the Quebec government. So we're partnered with the Quebec government in both our B2B hub and our Northern Hub. We have a PFS due out for Moberland in May of this year for a mine and concentrator, and a DFS due in October. So again, lots of news flow for both the B2B hub and the Northern Hub. The expansion of the Northern Hub, we purchased over 1,000 square kilometres of unexplored claims late last year from Troilus Gold Corporation. This provides good opportunity for additional exploration to occur to the northeast and also to the southeast, around 20 kilometres along strike to the northeast. So great opportunity to broaden our resource base in the north to feed our downstream chemical ambitions. Timelines for the Northern Hub, targeting first production of spodumene concentrate by H2 of 2027, so June of 2027, with our goal of hitting that 100,000 tonnes of lithium hydroxide production by 2030. So what does this all mean? Powering North America is about size, speed, and downstream. And you wrap that all up in the leading ESG centre of Quebec, and we think we're onto a winning combination. We have a footprint in Quebec of over 200,000 hectares. We have a JORC resource in the south of 119 million tonnes. We have a targeted resource of 60 million tonnes in the north. So if we hit that target, we'll be looking at over 180 million tonnes of resource in Quebec. This translates to production at NAL of between 85,000 tonnes and 115,000 tonnes for the first 6 months of FY24, targeting that 226 nameplate from NAL. So what does this mean for investors? Lots of exciting news to come this year, and we believe this year is going to be a transformational year for Sayona, particularly once we hit that first milestone of being the next producer in North America. We have the NAL restart to look forward to next month. We have news flow around additional offtake agreements. first spodumene shipment and first revenue to the joint venture in July. We have feasibility studies for NAL's partially constructed carbonate plant. So we've got a head start there in terms of versus a greenfield asset. That carbonate will come back, that carbonate PFS will come back in April. We have the exercise of our earning option with the Valley joint venture, which is more resource, more tons for NAL. And we also look forward to the resource upgrade from Mobilan and the PFS and DFS in May and October this year. So lots of news flow to look forward to, and it's going to be a big year for Sayona. If you have any questions about the presentation or the company, please feel free to come and have a chat to us out the back. Thank you very much for listening.
I missed slide 17 with the facts and figures back in. Were they there? Can we get them from you outside? Rightio. Now, giving us an insight into International Graphite's plans to develop the Springdale Graphite Project, which is in the south of WA, and also their battery anode production capability in Collie. Would you welcome to the lectern, please, newly anointed MD and CEO. This is Andrew Worland. He does newly is perhaps a term. He's got more than 30 years experience in similar roles, and he's done quite well in all of those. But he's here today in this particular role. He's been with International Graphite since 2019 in a capacity as a director, but would you please make him welcome to present to us today? Thank you.
Thanks, Chrissy. And thanks for RIU for having International Graphite present. This is a fantastic Western Australian story that I know we're all highly motivated at International Graphite to deliver for our shareholders and stakeholders. We will be making some forward-looking statements in this presentation, so please note the disclaimer, and we acknowledge the country on which we work down at Springdale at Collie. So as I said, our vision is at International Graphite is to become Western Australia's first fully integrated mine-to-market producer of graphite battery anode material. Our graphite project is located 30 kilometres south of Ravensthorpe Nickel Mine, just near Hopeton in the state south. And our downstream processing facilities we aim to build in Collie. And we've already established in Collie our pilot plants, micronizing and spheroidizing facilities, and a purification plant that we were thrilled to have the Premier of Western Australia open for us on the 25th of November last year. Just briefly on the capital structure, we were listed in April of 2022. We have 165 million shares in issue. Our market cap as of Friday's close of business was $40 million. Our major shareholders, Comet Resources, who we acquired the Springdale project from, the board and management own roughly 41% of the fully diluted capital of the company, and roughly 50% of the company's stock is escrowed until April of next calendar year. So the evolution of IG6, we've come at the graphite industry probably from a different angle for many of our peers, where we haven't come at it as a mine owner looking to work out how we get our mine product to market. The evolution of the company is based on its founding directors, David Pass and Phil Hurst, who are some of the states and maybe the country's best metallurgists and process design engineers. Many of you at this conference would know them and have used them on your graphite projects in Africa and in Australia. They saw the need to take graphite concentrates downstream to really capture the full value chain that the battery anode material had to offer. And so for 4 years, we've been working on due diligence and process flow sheets that ideally were designed for, I guess, a tolling business that would be created to treat global mined concentrates. With the introduction of the Springdale Graphite project to us, which we believe was suitable to battery anode material, we merged those two assets together and created International Graphite, and that was the basis for our listing back in April of last year. So therefore, we do have a very technically focused team. Most of the people in that slide are metallurgists, process design engineers, project managers or chemists, and that is particularly important as we progress our battery anode material studies. So this is probably maybe the most important slide of our deck that we put up when we present. It's the value chain for graphite. So all mine graphite is mined in the form of a graphite concentrate. Generally speaking, it's of 95% concentrate. Historically, you've heard a lot about coarse flakes. The battery anode path is for the finer flakes, and we're talking sort of sub 100 micron as a fine flake. The concentrate then has to go through a number of stages of processing. The first stage in that processing for a battery anode material is micronizing, and the second stage is spheroidizing. Now, micronizing in itself is a pretty important step because it not only has a pathway to battery anode material, it also has its own industrial market, and that's important for IG6 for reasons which I'll explain in a moment. The micronizing and spheroidizing steps are primarily physical steps. There's no chemistry involved there. And the idea of that is to reduce the size of the flakes further and to shape them into a form capable of being used in battery anode materials. The next step is to purify, and that's to take the 95% concentrate grade up to 99.95%, which is the battery anode grade. And at that point, you actually have an intermediate product. You'll often hear groups talk about PSG or SPG interchangeably, but essentially that is purified spheroidized graphite. And that has a market in itself, and that can be sold to groups that then coat the PSG. Now, the full value chain is captured if you can coat. And so what we are looking to do, and what really everybody that's going downstream is looking to achieve, is a battery anode material that includes those 4 steps of coating, purification, spheroidizing, and micronization. IG6's plan to enter the market is based on 3 steps. Our first step is to establish a micronizing facility in Collie that's independent of a particular mine, and in fact will start on the basis of imported concentrate feed and then be ready to take concentrate that's mined from Springdale. We've ordered our qualification plant equipment for that. We'll have a DFS completed in 6 weeks' time, describing a 3,000 tonne per annum facility. We'll be operational and in cash flows by mid of 2024 on that facility. And just as importantly as producing cash flows, it actually gives us great exposure to the market, allows us to establish a brand in the marketplace, all of which is really important for qualifications and future work that we'll do on the battery anode facility path. It's also the business that the state government has supported. They provided us with a $2 million grant to build that micronizing facility. And as we'll come to in a moment, there's more facilities available from the government as they look to encourage industry into Collie. The second phase of our work concurrently with the micronizing facility is to complete our battery anode material feasibility studies. At the moment, we have pilot plants that have been for micronizing and spheroidizing that have been established in Collie, and those facilities are being used to conduct test work program on imported concentrates and also the concentrates we're developing from Springdale. We'll be working with purification and coating partners and looking to apply those technologies into Collie. Finally, our Springdale mine, I'll come to that in more detail in a moment, but it will be working that through the feasibility stage. We inherited a resource from Comet Resources, which we're expanding, and we'll go through the normal steps of bringing that mine to production and integrate that mine with our facilities in Collie. So since we listed back in April, we think we've achieved quite a lot in that 10-month period. We've established the battery anode materials facilities in Collie, which were opened by the Premier in November. We commissioned them, we piloted them and produced micronized and spheroidized samples, which were of high quality. We signed a $2 million funding agreement with the state government, who are supporting the 1,000 tonne per annum facility and will support the 3,000 tonne facility expansion that's subject to the DFS. We've ordered our qualification scale equipment that will arrive in June and be installed and be used for product qualification of our micronizing product in the second half of this year. We're progressing our battery anode studies and we'll have a concept study released in March of this year that describes the key attributes of what we think our battery anode facilities will look like in Collie. And down at Springdale, we've completed over 6,000 metres of drilling that we have results for, and we've had 3 new graphite discoveries on our tenements. And we think there's a 4th discovery that will be announced in the coming weeks based on once we receive those assays. So the reason for going to Collie, clearly Collie is undergoing a transition. The state government has committed a significant amount of development capital to help industry adjust to the wind down of the coal facilities. Over $600 million have been committed by the state government to transition the town, of which $200 million has been set aside in the Collie Industry Transition Fund, which is an unprecedented commitment by government to the region. It's also intimately connected through the Southwest Power Grid, and all of the downstream industries that are through the Kwinana Strip down to Collie require considerable power and access to power. So the closer you are to power, the better you are from an operating cost perspective. It's also uniquely located 450 kilometres from Springdale, sealed roads from site to Collie, and obviously close to port facilities. So it's a fantastic place to be working. I was down there yesterday meeting with the Office of the Premier, and we've got enormous amount of support from government to be able to establish our facilities and our business down in Collie. In doing so, we've made a huge commitment to the local community. 30 local suppliers are involved in the setup of our facilities. As I said, we've constantly doing R&D out of our facilities, treating imported concentrates, looking at how you process those concentrates through a micronizing and spheroidizing plant, changing the operating conditions to try and make sure we have the best possible data for our feasibility studies and our commercial scale facilities. As for Springdale itself, as I said before, located 30 kilometres south of Ravensthorpe. It's a sealed roads all the way from site through to Perth, essentially, and our goal there will be to produce a 95% graphite concentrate, truck it to Collie for processing, and then take that finished product to market. The project's 100% owned. We have 2 granted exploration licenses, of 1 prospecting licence, 1 exploration licence under application. Permitting's commenced. The land that we're operating on is farmland, so it's all been cleared previously. There ought not be too many in the way of fauna, flora, and associated challenges around permitting. We have an existing mineral resource that we inherited from Comet Resources. It's 15 million tonnes at 6%. With a high grade zone of 2.6 million tonnes at 17%. Comet Resources also handed over to us a significant aeromagnetic survey, which had been untested when we acquired it, and that has been the focus of our work since we acquired the property. The work that we also acquired had showed that the conventional flotation circuit would be appropriate to treat the graphite. It was a fine flake, and therefore it was suitable for battery anode material, and that had been completed by test work undertaken in Germany. So this is the topography and the aeromagnetic survey. We've done 6,000 metres of drilling. Our resource is that hockey stick there, and just there, that's the existing resource. We've basically been drilling in these areas here where you can see the anomalies to the far west. Over here, what's called SDE1. That'll be what we think is our 4th discovery. And in here at Central is where we've been drilling as well. So everywhere we've drilled, we've hit graphite mineralisation. And so we're very confident that this resource is significantly larger than what we've got currently described as mineral in inferred category. The deposit is going to be shallow. All of our drilling is open at 100 metres of depth, and we've pulled the holes at that point in time. So what's driving the opportunity? Very quickly, graphite makes 95% of the raw material in a lithium-ion battery anode. Up to 10 times graphite is used in a lithium-ion battery. Sorry, 10 times more graphite than lithium is used in a lithium-ion battery. In Benchmark Intelligence, estimate that 97 new flake graphite mines are required by 2035 to meet the lithium-ion battery demand, which is a considerable increase over where we're at today. And the world is seeking ethically and sustainably produced battery commodities, and that's what we have to offer, is a Western Australian-focused mine-to-market vision. I'll skip through. This is all driven again by electric vehicles and the uptake's breathtaking. I won't go through the numbers for you. These figures are off the International Energy Association's website and report of 2022. We need considerable new mines. Just briefly, government support. As I said, $2 million have been secured from the West Australian government for our commercial scale micronising facility in Collie. 200 million has been announced for the transition fund to help business and industry set up in Collie. The Critical Minerals Office in Australia has just announced a $50 million facility. There's feasibility funding available, R&D tax rebates, and we've seen with a couple of our peers in the industry that export credit agencies are prepared to finance, debt finance development projects. I'm going, Chrissy. So just to summarise, we think we've got the right commodity, we've got the right deposit in terms of its fines nature, we're in the right location. Western Australia is the best place to do business in the mining space. We believe we'll get early cash flow from our micronising facility in 2024. We'll undertake our BAM facilities, and we've got the team, special team, technical team to be able to pull this off. Thank you.
Well done, Andrew. Was that your first one? Was that your first one? Oh, fine. I got the virgin. Okay, well, no sympathy. Off you get then. Now, when we have the presenters up here on stage, I like to Google them. I could find nothing scurrilous about Andrew at all. The next fellow, though, I've got Steve Norregaard presenting next. I do. So, Steve, I found out, if I looked up Steve Norregaard, I found either a photographer of small insects or a channel swimmer to Rottnest. Which one is you? You're both. You really? Oh, good grief. I thought one was a kid. Well, you'll have to ask him about that at the booth. Really and truly. Come on up here. He's actually here today, obviously, in a mining capacity with Widgie Nickel. Now, Widgie Nickel was singularly focused on creating value from its Mount Edward project through its nickel resource. But now they've got an additional avenue for value creation. They've got a growing lithium endowment, making this fellow very, very happy. So the end goal, of course, is re-establishing a production base by the end of 2023. That raises questions for your investors, though, doesn't it? So you're going to go nickel, or you're going to go lithium, or could it be both?
Nickel lithium.
All right. Is that a Dr. Seuss terminology? Would you make him welcome, please, everyone, representing Widgie Nickel, Mr. Steve Norregaard.
Thank you very much to RIU for inviting me to come and present this morning. I feel very privileged to be here on the opening day in the first session. It's a bit of a novelty for me, so thank you. Widgie Nickel is a relatively new entrant to the ASX. We listed about 16 months ago, a spin out from Neo Metals. Normal disclaimer that goes with that. Neo Metals was of the view that the asset needed to be set free, Mount Edwards, thus Widgie Nickel listed. We listed on the basis that we were going to be production ready to produce nickel by the end of 2023. And it's probably a good opportunity for us to reflect on that strategic goal, because with the fact that since we listed, we've drilled over 75,000 metres, we've found additional commodities, the strategic goals of the company have been able to change. We remain true to our goal of being production ready by the end of 2023 with our Armstrong mine. That's progressing very, very well. We've had exploration success and further delineated our nickel mineralisation to a high degree of confidence, which now gives us the capacity to look further afield and present a longer time frame of continuous nickel production, which will evolve over the course of the next 12 months. The exploration continues, and we've had great success in the first 12 months or first 15 months of the company's existence, so we'll continue that momentum. And with every company, there has to be a bit of luck. We've had a little bit of luck. We've discovered a little bit of lithium, which now presents a wonderful opportunity for the company, which we're pursuing with great vigour, which I'll talk a little bit more about. First thing, you've got to have the right ground. And we're very, very fortunate from many perspectives. The company, when it first started, it wasn't a greenfields play. We already had a pre-existing endowment of nickel, albeit in low confidence. We're on granted mining tenure, which allows us to progress our individual projects through to production in an expeditious fashion. Very, very important in this environment where we see high capex and cost escalation. We've got the capacity of leveraging off a lot of existing infrastructure in the region. We have a railway line that runs straight past our front door going down to Esperance. The main arterial road that joins Perth to the eastern seaboard runs through our tenement package. We're connected onto potable water in our camp. And importantly, we have a nickel concentrator less than 45 kilometres away from our project area that's hungry for additional feed. I also talk about the underlying geology. This area is synonymous with its nickel production, and indeed our tenements have produced over 30,000 tonnes of nickel throughout their life. We also lie in an area that is highly prospective for lithium. That fact escaped me when I first joined the company, but I've become a little bit of a lithium convert. The image on the right, you see our tenement package is in what the geologists term the Goldilocks zone. We're proximal to a great big granitiferous body from which the pegmatites extrude. So location is very, very important, and indeed that's come to the fore for us. So as we sit here right at the moment, we've got opportunity from a nickel perspective, and we've also got an opportunity from a lithium perspective. So we've got choices. Before I embark in on a bit of the project, the team that we've got within the company now is second to none. We're not biased in any form. We've got a broad spread of expertise at board level, geology, process engineering, which is a very, very important aspect of us going forward. Myself as a mining engineer, a great team of people we've amassed over the last 18 months. Our performance as a company has been good. It could be better. We've had a high of 67 cents over the course of the since we listed. A low of 21, so we have stayed above par value for that entire period of time. As we sit here right at the moment, we're well and truly above that. We sit here right at the end of the December quarter with just under $9 million cash on hand. Fundamental value driver to every company is its resource base, and ensuring that that resource base is dynamic is a very, very important aspect. When we listed, the lion's share of our resource base was in low confidence inferred. We've successfully moved two of our resources, a significant component of each of those resources, into indicated. And we'll continue to do so as we evolve and develop our production pipeline. It's very, very important, and it's a point to note that if you look at the image on the right-hand side, you'll see that all of our resources are on the eastern limb of the Widgie Nickel Dome. They're all very, very close to each other in actual fact. It's only 15 kilometres north to south, which encapsulates these 12 separate resources. So for many companies where they want to develop multiple resources, that means duplicating overheads because of the tyranny of distance. It's one of the benefits for us in the sense that if we want to upscale our production, we can achieve economies of scale through these because we don't need to duplicate overheads, which is a significant attribute I think escapes many people. We are, as an organisation, infill drilling and upping our degree of confidence in each of these resources progressively. And you'll see over the course of the next 12 months, we'll probably move 2 or 3 of these resources into the indicated category so we can continue to develop that pipeline of new nickel projects. Only just over a month ago, we announced a significant resource upgrade at Gillett, which is the one resource that's taken up a significant portion of our time. Just under 1 million tonnes has been now converted to indicated. And it's a very, very important point for this part of the world down here. Gillett forms part of what we'll collectively call Widgie South, which is a collective of 3 separate nickel resources. In aggregation, they represent about 70,000 tonnes of nickel metal, a substantial portion of nickel. This will possibly be our second production centre. So us making the transition of converting Gillett into Indicator is very, very important, because now we can subject this Widgie South area to an economic evaluation. In terms of the outcomes from the study, it's the first time we've quantified the byproducts in platinum and palladium. In this case, there isn't a great deal. Importantly, for the purposes of Widgie or Widgie Multha, which has had a history of high arsenic, this particular body of mineralisation is very low in arsenic, which is an important attribute, in addition to the fact that it's high in iron. Iron, MgO, is a very, very important criterion for the downstream aspects of nickel mining. We've nailed it on this particular resource. Now, I talked about Widgie South. This will be the company's second mine. It'll be a long life operation just by virtue of the significant amount of nickel metal. We can now subject ourselves to economic studies. The reason why we've aggregated these three is because they're all in close proximity to each other. You see the image on the left here, Widgie 3, which is the only one of these three resources that has been exploited historically, now provides a conduit for us to put a decline off the bottom of that. The Gillett body of mineralisation, which is continuous now for just on 1,000 metres along strike, is only 300 metres away from Widgie 3. So we develop across to Gillett, and in a northerly direction, we'll eventually find our way to the biggest resource we've got in this part of the world, which is Widgie town site. This will be a long life operation. The image on your right indicates the potential that still remains here on the Gillett body of mineralisation. The shape, the green shape you see here, is the new resource shape, and you see drill holes that were only announced 2 days ago. The three blue holes really excite me in the sense that they represent an excellent opportunity to see this resource grow. And it's growing in the right direction. It's growing in a northerly direction closer to more nickel metal, which means that the capital requirement to get this project off the ground overall will be very modest and continue to be. We'll continue to focus our exploration efforts at the northern end here, because we've got Gillett North, which you can see the MERC 225 drill hole there. That represents an excellent opportunity to us to find additional high-grade nickel metal. So that's the exploration side of the story. Armstrong. It was a concerted focus of the company on day one to push this project through feasibility and get it to be in a position where we can exploit it. And we've been successful with that. We've infill drilled it. We've generated a metallurgical sample, which is currently undergoing test work. We completed a scoping study in the second half of last year, which demonstrated the viability of the project. We now have a new resource model, which has achieved 98% of that resource is in high confidence indicated. So we've reduced the resource risk. And we sit here at step 3 in the process of undergoing the final stages of a full feasibility study and now embarking on the permitting and various other aspects so we can have an operation that's production ready by the end of 2023. I'm supremely optimistic we'll exceed that, and I'd like to think that we're ready to go by June of this year, but a little bit of slack in the aspiration is a good thing. A little bit about the resource. Armstrong, 2 mining methods considered, both of them eminently viable. Nickel price now is a lot higher. It makes a lot of money, somewhere north of $80 million worth of free cash flow in a short amount of time. We're pushing ahead with all the various aspects required to get this project up and going. And indeed, the dewatering is well advanced. Talked metallurgical test work. all the environmental permittings on foot. Mine design with the new resources happening, and project management plans are well and truly on their way. So that completes the nickel story. Let's talk about lithium. In October of last year, we discovered, we took some rock chip samples. We were successful in identifying some high-grade pegmatite. We've moved very, very quickly. In the last 5 months, we've now completed two drill programs, and we're on the cusp of a maiden resource with this particular resource. The outcrop, spectacular outcrop. The rock was poking out of the ground. We've since that point in time done 3,500 metres of drilling, some 91 RC holes, 4 diamond holes, and we're now announced only this morning the outcomes of all of that drilling. I think we've got a red hot opportunity for a DSO project. We've been very, very specific because it's time critical that the core of this resource has been drilled out on a 10 by 10 pattern, and very close to surface, very shallow dipping, broad widths of mineralisation with only 15 to 20 metres worth of cover. So an excellent opportunity for us. It's being fast-tracked. Metallurgical test work to determine what sort of recoveries we can achieve. We're doing ore sorting. Mining studies are on foot now, and we continue to look at various other targets we have on our project area. There it goes. So 2023 is going to be a busy year for us. Ongoing exploration. I've had lots of interest from people wanting to vend in on the lithium. So we're still a single company, single focus on nickel lithium. Armstrong's going to happen for us. Widgie South will happen for us ultimately. The lithium is a growing story and could be a game changer for the company. So it's going to be a big 2023 for the company. A new battery, Chris. Thank you very much, ladies and gentlemen.
It was lithium. Good on you, buddy. You're used to the pressure though, aren't you, out there? No, it was interesting bio. We're going to chat with you more about the extended version of the last 2 minutes. Team, can I grab a new battery in that one, if that's okay? Can someone give me a runner? If you've just come in at the back, down here it says reserved. It is no longer reserved. It's reserved for you. So if you'd like to come down and grab yourself a seat at a table and a bit more room, and if you're up the back and you'd like to change position, you can come up and join us as well. Our next guest up on stage, our next speaker, is a metallurgist. He's got more than 20 years experience. Marc Ducler. Hello, Mr. Ducler. Now, he has experience in operations at a senior management capacity in both precious metals and also in bulk commodities. He was actually the director of Egan Resources, and you may remember them. They went from an IPO to a big takeover in less than 3 years. Mm-hmm. So what can you do for us today? I'll give you that back and we'll just see what we're doing up the back there. Well, hopefully that will work a little bit better for you than it did for Andrew at the end there. So he's at Astral Resources now. He and his team have been really busy growing their flagship Mandilla Gold project. Marc, I'm going to hand over to you for all the details. Make him welcome, please, everyone.
Thank you. I mean, the last time I actually heard you speak was actually at Christine Ely's funeral. It was rather tearful, quite beautiful. So thank you very much. Christine Ely's funeral. You spoke at her funeral. That was the last time you spoke. So I'll try not to cry like a baby as I talk about Astral, because that won't actually impress anyone here today. So thanks very much for your time. It's a pleasure to be at the RIU Explorers Conference. This is the very first time Astral is actually telling its story. And we'll see how the clicker works for us. Okay. So our projects are in the Kalgoorlie-Kimballi region. Steve's already given us a bit of a real estate view because we actually share tenure with Steve's company in Widgie Nickel. This area should be very familiar from a geography perspective and should be extremely well understood from a mining jurisdictional viewpoint as well. There's obviously some really good benefits of being in this area, easy access, great serviceability. But one of the real positives for having your projects in this Kalgoorlie-Kambalda region is if you get to that 1 million ounce mark, certainly from a gold perspective, obviously, you can be almost certain that at that scale, your project gets developed and it becomes commercialised. We have two key projects in the region that we're investing our money and effort into. The first is Mandilla. It's right next to the Coolgardie-Esperance Highway. It's only 22 k's from Goldfields' 4.7 million tonne per annum St Ives process plant, and it's 70 k's from Kalgoorlie. The second project is Fayetteville, and that's 14 kilometres from Kalgoorlie, and we actually have Northern Star as our neighbour to our immediate north. In December of last year, we put out a resource estimate. That was our fourth update in 3 years, and we clicked over the 1 million ounce mark with 30 million tonnes at 1.1 grams per tonne for 1.03 million ounces. The resources at Mandilla have been growing an average 28% every 6 months for the last 18 months. And we have 2 rigs turning at Mandilla as we speak. We've actually been at the Mandilla project drilling for 3 years now. We're getting better at how we target the mineralisation there, and we're getting better at actually targeting these high-grade trends. So specifically at Thea as well. And in the last resource update, we added 250,000 ounces at a discovery cost of $16 an ounce. So Thea is still growing and still growing rapidly. Last year as a company, we drilled 45,000 metres of drilling. As of the 10th of January this year, we were actually already on the ground drilling at Fayetteville. We completed a 4,000 metre program there, and we've now moved those drill rigs back to Mandilla, and we have 27,000 metres of RC and diamond drilling underway as we speak. We are focused on growing the resource base. The reality is you can only achieve that by drilling. It's the middle of February today, and we've actually been drilling for 5 weeks straight already. We are getting very close to the critical mass that we believe will allow us to develop a standalone project. So from a board and management perspective, the team are well covered in all the technical fields that matter. We were previously successful in a previous company, and we achieved that success by doing really good technical work, and we're continuing to do that good quality technical work today. So now moving on to the project, that's the Mandilla project. You can see the local area geology there in close-up view. We don't have a massive tenement package in this region, but as the opportunity presents to grow it, we're jumping on that opportunity as it presents. It's been growing rapidly as a project. 1 million ounces have been added in 3 years. Mandilla now consists of 4 deposits. Thea is the main deposit. That is the main game. 85% of the resources are at Thea, and it grew rapidly during the last update, 220,000 ounces of growth. So it is still growing rapidly. EOS is a high-grade paleochannel deposit with the potential for mineralisation to extend into the fresh rock. And Hestia is our newest discovery. We've already identified mineralisation over 1 kilometre of strike, and we've got the RC rig camp there at the moment. And once it actually finishes at Hestia, it moves on to Thea. So as I said, it was 45,000 metres of drilling last year. 6,500 metres of that was actually put into the Thea deposit. And of that, 5,300 was actually diamond drilling. I spoke about the fact that we believe we're getting better at targeting the high grade at Thea. And perhaps a really good indication of that is of the 18 diamond holes we put into Thea last year, we actually averaged 97 gram metres of gold across those holes. Typically for us on our geology sections and plans, anything above 50, we highlight as a purple dot or a purple bar. So to average almost double that over that entire program is a fantastic return for us. And you can see it in some of the results. 25 metres at 10.6, 32 metres at over 5 grams, 4 metres at 25 grams per tonne. And then moving on to EOS, we did infill and extensional drilling there, and that's demonstrated that is a high-grade paleochannel deposit. 3 metres at 12, 2 metres at 13, 1 metre at 17, 1 metre at 12, and the results continue. And then finally at Hestia, we also found some decent high grades there. And I'll show you in some of the coming up images, these actual high grades are on sectional spacing that's in excess of 80 metres. So we haven't even converted that into resources yet. 6 metres at 7, 1 metre at 26, 2 metres at 6. So that aggressive drilling that we did in 2022 has certainly delivered. And given the drilling that we've already completed at Fayetteville, the 27,000 metres that we've got underway at Mandilla at the moment, we're on track to drill 31,000 metres within 6 months. So we will more than exceed what we drilled in 2022. Okay, so that, as I said, that drilling led to our fourth mineral resource update in 3 years. The illustrations that's on the slide show the block model and the pit shells for the December 2022 update. Some important points to note. The cutoff grade is 0.39 grams per tonne, and the optimizations we're doing on $2,500 gold price. Those are the same assumptions we used back in May 2021. So we're not changing the cutoff grade or increasing the gold price to increase our resources. This is genuine exploration growth that has been achieved consistently over the last 3 years. So at Thea, we added 220,000 ounces. That was a 33% increase from only 6,500 metres of drilling. The pit volume at Thea increased by 22%, but we actually grew the inferred resources at Thea by 49%. So we are still finding new ounces within this Thea deposit. In fact, if we grab this new block model and we overlay it over the January 22 update, because that was the last update we did, was 12 months ago, we actually increased the tonnes by 9%, increased the grade by 5%, found 14% more ounces in the same pit shell as we had in January 2022. So the Thea deposit has got more legs for growth, and we have the diamond and RC drilling planned and underway to demonstrate that. And then at EOS, we had 190% growth in ounces and, more importantly, a 33% increase in grade. Remember, EOS is a paleo channel. Thea actually started its life as a paleo channel, and then we found over 800,000 ounces of fresh rock underneath the Thea paleo channel. We have mineralisation that extends into the fresh rock at EOS, which will be the subject of testing as we go forward. And then Hestia, that's our newest resource. We declared a maiden mineral resource here. More importantly, there's a kilometre of strike. And as you can see on the image, the mineralisation extends well to the south of the actual optimisation, the pit optimisation. And at the moment, that's because the mineralisation has been identified on a drill spacing that's greater than 80 metres. And we currently have the rig there infilling that. So the additional work we do at Hestia will increase the scale and grade of that deposit. So we actually started drilling at Mandilla on Australia Day. We've got 2 rigs on site at the moment, a diamond and RC. The diamond rig has got 6 weeks of work in front of it and it's drilling its way through a 9-hole program. The RC rig has 25,000 metres to do, which is about 170 drill holes. RC is starting at Hestia. You can see it on the image, the white squares. So we're working from north to south to actually drill out that 1,000 metres of strike at Hestia. Once the RC rig finishes there, it moves on to Thea. Hestia is shear hosted, so it's important for us to get that 160 metre drill spacing down to a 40 metre spacing, and that should allow us to convert it, if not to inferred, or inferred and potentially into indicated resources. The diamond rig is currently at Thea. It's already drilled MDRC 660, MDRC D660. That was a 435 metre hole. That only come off the rig probably, it was Thursday of last week, and we still need to process that and get it in the lab. But we're already pretty happy with what we've seen. And that's a significant hole for us. We will extend mineralisation to Thea. There's another 7 diamond holes to do. These are all testing the western flank of Thea. And last year, when we were testing the western flank at Thea, we added 220,000 ounces. So there's potentially significant more growth to go with this Thea deposit. Again, when the RC finishes at Hestia, it moves to Thea. We're testing the eastern flank. Last year, we found some high-grade trends that extended onto that eastern flank, and we actually need to follow that up. Once that drilling on the eastern flank is finished, the drill rig moves and it starts drilling out the southern portion of Thea, doing a significant infill and extensional drill program there. So over the last 3 years, we've added 1 million ounces at Mandilla. We've got 27,000 metres of drilling that will be completed before the half year at Mandilla, and we're executing on our strategy to continue to grow the resource. But I want to spend 2 slides talking about the Fayetteville Gold Project now, and that's because we actually now have reached that fortunate position where we can drive both projects simultaneously. As a reminder, Fayetteville is 14 kilometres away from the 92 million ounce Golden Mile deposit. The stretch of land from the super pit all the way south to St Ives is some of the most gold endowed land in Australia. We've grown our tenement package there to 27 square kilometres. We've already got 3 million tonnes at 1.3 grams per tonne for 116,000 ounces, and that's all at the Think Big deposit. Fayetteville is only 50 k's from Mandilla, so there are obvious synergies for that current 1.3 gram per tonne resource to be able to truck to a central processing plant at Mandilla. From an Astral perspective, Feysville provides us with a pathway to add high-grade ounces and accelerate our journey towards this standalone mine development. The prospects that we've tested from the 10th of January through to Australia Day have already returned some pretty high-grade hits previously. Think Big's got 10 metres at 10, 10 metres at 8, 17 metres at 4.9, 54 metres at 1.8. Saintly, 4 metres at 50 grams, 3 metres at 48 grams, 21 metres at 2.7. Rogan Josh, 6 metres at 8. Then between Ethereal, Camperman, Dalray and Hyperno, 9 at 10, 13 at 9, 6 at 10, and 10 at 2.9 respectively. So as I said, we finished our drill program before Australia Day. We hit the ground on the 10th of January. We completed 9 holes of diamond for 1,400 metres and 26 holes of RC for 2,500 metres. This is the first drilling that we've done at Feysville in over 3 years. We know that there are enriched supergene style deposits that we could be drilling out, but this initial program of RC and diamond is specifically targeting primary gold mineralisation to see what is the potential scale that we have at Feysville. Also, from some of the recent field mapping we've completed, we've actually drilled down plunge and a long strike of some of the historic underground shafts that the old timers left behind that dot the landscape at Michelangelo, Mont Vesuvio and Rosina. So the results from these 4,000 metres are pending, and those results are going to inform what we do next at Feysville. But I can almost guarantee we'll be back at Feysville drilling certainly before this end of the half year. So in closing, because I do not want Christina standing next to me tapping her foot, we've got a genuine plus 1 million ounce deposit in the heart of the goldfields. This is no longer about if Mandilla is developed and mined, but when. There are no other deposits of this scale between Kalgoorlie and Norseman and 100 kilometres either side that aren't already in the hands of a major or a mid-tier miner. So this location also has a very strong history of successfully being commercialised, and we absolutely expect Mandilla to be no different. Our most recent resource update returned an additional 250,000 ounces at a cost of $16 an ounce, and there's 27,000 metres of drilling underway at the moment. So we haven't stopped growing. And then we've got the opportunity at Feysville. We've got a number of prospective targets there. Our initial focus is to determine what the fresh rock gold potential is. And with the results for 4,000 metres that are pending, we are confident that we're going to be back there drilling again before the end of this half year. So to finalise, 1.15 million ounces that have been defined, we'll have 31,000 metres of drilling done by June 30. And Astral Resources is absolutely closing in on the critical mass we need for mine development. Thank you.
Thank you, Marc Ducler. We will talk later out near the water cooler, which is where you actually you put us back on track. You have indeed. So they're out near the water cooler if you'd like to have a chat with them a little bit later on. Right. Here's my final person in this last session. They've done really well with this session because this is the longest one. So we've sat for 2 and a bit hours. So I know you're getting a bit toey, but those of us who stay to the end of this fantastic presentation won't just get that extra little bit. We're also going to get first dibs on the sausage rolls, potentially. How are you feeling?
Very good.
Have you sat through all the other ones?
I sat through the last 2.
I did see you sneak in. Now, Roger Fitzhardinge is this man up in front of us. He's the General Manager, Exploration and Growth for Centaurus Metals. Now, they are rapidly closing in on their objective of developing one of the world's most significant new green nickel sulfide projects. And they're fresh from another major resource upgrade for its flagship Jaguar nickel project, which is in Brazil, and that was late last year. And they're on track to deliver a definitive feasibility study, and that should be done sometime mid this year. To tell us more, would you please make Roger very welcome this morning, everyone?
Thank you very much, Chrissy. Darren Gordon's not here to present today because this weekend is Carnival. So he's in Brazil and I'm here presenting to you guys. So there's something in that. I'm here to talk about the Jaguar Nickel Sulfide project, and that's situated in Brazil. And last year we delivered a resource update of 108 million tonnes at 0.87% nickel for more than 930,000 tonnes of contained nickel. And that makes the Jaguar Nickel Sulfide deposit the biggest nickel sulfide deposit on the ASX that is not in the hands of BHP. So it's a very significant deposit. Please read that at your leisure on the internet website. So in summary, we have this world-class deposit that we continue to grow. We are in the midst of de-risking it by delivering a DFS that will be delivered in the middle of this year. We're in Brazil and specifically in the Carajás, which is a great place to operate with access to infrastructure and low cost and low carbon emitting renewable energy. That DFS is going to look at producing more than 20,000 tonnes of nickel in nickel sulfate per annum over a life of 20 years from open pit operations. So it really is a long life mine. And we expect to bring this online by 2026, which is really going to be well timed to meet the forecast demand for Class 1 nickel. A quick corporate snapshot. Our top 20 holds over 70%, so very tight register. We have some very nickel savvy investors there. You'll see Hermanas, and also some North American institutions that understand how to operate in Brazil in Sprott and Dundee. We also have a lot of independent brokerage coverage, and I'll urge you to go and read that at your leisure. So why do we think operating a mine in Brazil is really good in terms of this coming into the new EV market and delivering low carbon dioxide nickel metal? Well, it's multiple reasons. The main reason, again, is that Brazil national grid is now running at about 80% renewable energy, and most of that comes from hydro. The process to license these are well understood. We've licensed them before in terms of environmental and mining licenses. Both those licenses are already with the respective agencies, and we've also updated them with the vision of a bigger project that will be delivered with a DFS. So we know it's going to be a big project, and we're pushing those licenses through. Last year, we were put on the Strategic Mineral Policy list, one of the first projects in Brazil to be put on that list by the Brazilian government. And that is a department that helps push projects like this through to production within Brazil. Once up and running in the area that we operate, we'll have a favourable tax system. Again, this is the Brazilian government trying to encourage investment in the Lower Amazon region. And very importantly, once this thing starts spinning off cash, the royalties goes back to the municipality. So 65% of Brazilian government royalties goes back to the local municipality. So the local communities see not only jobs, but they also see investment back into their home. So we are situated in the western part of the Carajás mineral province. For those who are not familiar with the Carajás, it really is a world-class mineral province, and it's a little bit like rolling the Pilbara and the Gawler Craton into one. You've got the biggest iron ore mines in the world in S11D, which is about 150 k's to the east of us, and also the second biggest IOCG copper gold mine in the world in Salobo. Now, Vale's been operating here since the 70s, so that's 50 years of investment from them and the government into infrastructure, sealed roads, power, and rail. So we're situated just north of the towns of Tucumán and Orlando de Norte, and those two towns have a combined population of 70 to 80,000 people. And they've been servicing the Onça Puma ferronickel plant for the last 15 to 20 years. So there's plenty of skilled labour and plenty of service providers at the ready to help us bring this project online. In 2021, we completed a scoping study, and that scoping study we used a $7.50 nickel price. Today, the nickel price is floating around $11 to $12. So you can see there produces some really favourable economics. MPV, today's nickel price of about $2.6 billion, and that spins off $500 million in EBITDA per annum. Now, we can't control the nickel price, but what we can control are some of the inputs that are going into the DFS that is being rolled out this year. We've already updated that resource. So the new resource is 65% bigger than the resource that underpinned the scoping study. And also we're trying to optimise the mine schedule and the process route. There will be creep on the capital and operating costs because of inflationary pressures. That's to be expected, but we expect the size of the project and the increase in nickel price to more than compensate for these inflationary increases. But it's not just about making money or low-cost operations anymore. It's also about the cost of the environment. And fortunately, with the nature of the near-surface high-grade nickel at Jaguar, along with the near 100% renewable energy that's going to power the process plant, we're at the lower end of the cost of carbon dioxide per tonne of nickel equivalent in these projects. So we believe that once we're up and running and even moving into the first couple of years of production, when the grid moves to 100% hydro and renewable power, that we can move this to net zero carbon dioxide for our nickel sulfate production. So at the moment, the engineers are working diligently on the DFS. We delivered them the resource at the end of last year, and the first thing they've done is go off and run the optis and getting the schedule optimized. The first thing we notice is that the pits, which used to be individual pits at Jaguar, have now coalesced into one large pit. This large pit is over 3 kilometres long, more than 100 metres wide, and down to 300 metres depth. That's as big as the Kalgoorlie super pit. So we know this is going to be a very big mine, produce a lot of nickel in sulfate for a long, long time, and low cost and low carbon emission. Just as importantly, we're running the pilot plant. So I know that the pressure oxidation component of that plant has been completed at ALS Met in Balcata, and they're now in the process of doing the solvent extraction. So we expect that to be finished within either this week or next, and then within the coming weeks, we'll have the data collated, and that gets pushed off to the engineers. And that's a key piece in us getting the DFS completed by the middle of this year. But just as importantly, that's going to create a lot of nickel sulfate product that we're going to be able to use to go and talk to off-takers to try and find funding solutions for the project. So while the engineers are de-risking the project, we've been in 2022 and now in 23 working hard at trying to grow that project. We completed over 160,000 metres of drilling since 2000, acquiring the project at the end of 2018, and that came to the amalgamation of this resource that we delivered in November of 938,000 tonnes. Now, the drilling last year was all about converting as much as we can into measured and indicated, because that's what underpins the DFS and the maiden reserve estimate. You can see there's 730,000 tonnes in M&I. And very importantly, more than 500,000 tonnes of that, that's 500,000 tonnes, is sitting within the top 200 metres of surface. So that's going to come out in an open pit. Just as importantly, if you run a 1% cut across the whole resource, you can see that there's a nice 28 million tonnes at 1.5% nickel component within that resource. And just as importantly, again, is that 30% of that is within 100 metres of surface. And what that means is when the mining engineers are making their mine plans, especially in the first couple of years of production, that they can target high grade as required. And that's the sort of flexibility that you need when you're going through the payback periods. So the guys in Brazil have done an outstanding job of growing this resource since we first got it back in 2018. We've increased the resource by over 80%. That's 420,000 tonnes of contained nickel metal in 2.5 years, and adding that at a rate of 160,000 tonnes per annum. Our target on site is to get this well beyond 1 million tonnes of nickel metal, and 1 million tonnes of nickel metal is considered a world-class deposit. And although the graph's quite small, you can see the yellow bar here is Jaguar, and the only deposits on the ASX that are to the right of that bar are held by BHP. So it's a big deposit, high grade, near surface. But we're very confident that we can continue to grow this well beyond that 1 million tonnes. The resource that we'll put out in the middle of, or at the end of this year, will be from some of the additional down dip and extensional drilling around the pits. But we're also going to start in the next 2 months a very exciting Jaguar Deeps program. And this is all about the style of mineralisation that we have at Jaguar. Jaguar is not like your conventional intrusion-related magmatic nickel sulfide deposits. It's a hybrid, understood to be a hybrid between that and the IOCG style mineralisation that we find in the Carajás. And this sort of mineralisation is related to these really deep-seated regional scale structures and shear zones that you can see here at Salobo, which is the biggest IOCG mine in the world, are being drilled by a valley down to a depth of 1,400 to 1,200 metres deep. The mineralisation style at Jaguar is very similar, and we see no reason that this mineralisation cannot continue down to these depths and beyond. The hole you see behind me is the deepest hole that we've drilled to date. That's hole 445. It intersected 10 metres at semi-massive nickel sulphide that I would hazard a guess is going to run over 3%. And that was in a broader intersection of about 20 metres. And that's 600 metres below surface and just below the last resource that was put out in November. So we pushed the hole a little bit further, another 150 metres down to the bottom hole depth of 770, and that sets up the platform for the borehole EM. And the borehole EM is really the driver behind the great success story of drilling and resource growth at Jaguar. You can see there's a lot of sulphide in these intersections, so it's very conductive and lights up amazing conductor plates that allows the drillers to continue on their merry way, or the geologists to continue targeting. So we are planning to get a rig that can drill down to 1,1600 metres and a winch that can allow our probe to get down to that depth and start in the next month what we're going to call the Jaguar Deeps program. And drilling down there, we expect to hit the mineralisation as well. We won't probably be able to get this across to inferred resources at the end of this year, but we can certainly start to talk about exploration targets. And you can see there that's going to be 600 metres, almost double the down dip extension of Jaguar South. It's important to note in the scoping study that all these deposits, Jaguar South, Jaguar Central and Onça Preta, had underground stopes optimised below them, and they bottomed out on the resource. So if we grow the resource, then we can continue to grow the underground operations and eventually bring them onto mine life. So we're going to work hard at pushing them out. We've finished the RC rig, has finished up the sterilisation drilling and is now working on Greenfield's pipeline of projects. We're drilling at Flipperama and Twister, and I look forward to bringing results from those in the coming months and weeks. And what's going to happen in 2023? Well, we're going to get plenty of news from the drill bit. The Jaguar Deeps program, I feel, is going to be very exciting. We'll also be drilling in and around the pit, trying to convert any hanging wall, footwall waste into ore that can improve on our strip ratios. We're going to deliver that DFS in the middle of this year, and that, along with the approvals, is going to set us up for a final investment decision by the end of next year. If you have any questions, please come and see us at booth 92 out in the foyer. Thank you very much.
Roger Fitzhardinge, on time. Thank you very, very much. Right, team, I see you're on your way out. Stewie has asked me to mention, can you please keep your sausage roll intake to 2 sausage rolls, because he's going to count them otherwise. So if you see a power-packed young man counting in your sausage rolls, be afraid, very afraid. He's had to streamline the budget this year. We'll be back. I'll ring the bell. And our next session is only an hour and a half long, so a little bit shorter. Thank you, everyone.
Hi, my name is Brad Gurry and I'm the CEO of Social Suite. Social Suite's an environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference, and I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, Coda Minerals, Gallon Lithium, Galileo Mining, Helix Resources, International Graphite and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, 1, to attract capital from investors that value ESG disclosures, 2, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. 3, mitigating organisational risk while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG needs.